What's going on, everyone? Welcome back to It's Just Trading Trade Recap. Today is February 10th, 2026, and we're just gonna hop right into it. Coming into the charts today, I was looking bullish. I said we was looking bullish yesterday during the trade recap, so I'm still looking bullish coming into the day. So, areas of where I would want to see bulls step in on the 4 hour would be this fair value gap right here, since we pulled in it overnight, but we didn't quite get to the 50% of the 4 hour fair value gap. So we're just gonna play this forward a little bit, how I do, walk it up so you guys can hear the thought process. Let's see, 9 o'clock is here. So all right, so looking at this, looking at our 1 hour market structure, we are in a tight little range. However, what stands out to me is that, hey, we market structure shifted down right here because this is the low that made the highest high. We shifted down right here, and we never got back up above this high right here. So coming into our day, I was paying attention to this high right here because this high made the lowest low in the 1 hour chart. So if we were going to come into the day and basically try to figure out which direction we're going, I would pay attention to this hourly high right here, especially if we're close to it at market open. Like I said, we're in this tight range. However, it still was a lot of points that could be made during this in this range. So we have also, if we're checking our 15-minute chart, our 15-minute shifted back down here. So what that did for me was told me that, hey, our 15-minute and our 1 hour are both in the same direction, meaning my 15-minute market structure and my 1 hour market structure is both bearish right now, and my 4 hour is bullish. But if you look at where we're at in price, we're above the 4 hour zone, or the 4 hour support level, or the 4 hour fair value gap. That would push us, or in my mind, with my theory of thinking, that it will push us, project us up on the 4 hour structure, right? So we're above it. So in my mind, I'm like, okay, you got two options here. You can either go off of the 1 hour structure and the 15-minute structure and take shorts back into this, or you can wait until price come into this and then give you what you're looking for to come back out of this, and then just target these highs right here. And then we also have like 4 hour highs over here that we will ultimately target as far as like the draw on liquidity. However, if you're an intraday trader, you're only, for me, I only try to catch like 100 points at least. Where I'm trying to enter to where I'm trying to exit has to be at least 100 points, because I know I can catch a good amount of the movement in the inside. So so I'm watching that 1 hour level, and then I'm also watching this 15-minute high, because if we're going to go back longs, we need to close above the 15-minute high. But it's odd that my 1 hour level and my 15-minute high, they're in, like, if I get up here and close in the 15-minute, then my 1 hour could always come back down and draw down on that next 15-minute, which would, kind of throw me off. So ultimately coming in here, I was like, okay, we're holding this 1 hour level. We got this 1 hour this 15-minute fair value gap right here that it looks like we're holding. And I was calling this out in my with my Discord members that were trading with me live. I was like, hey, if we're gonna go short, if you're gonna go shorts based off of the 15-minute and the 1 hour, we're in the best place to go shorts to try to come down and catch these lows down here. And then also the best place to push out of our 4 hour zone would be the 50% of this 4 hour fair value gap. So I had a hiccup today, and I didn't know we had news, and then I seen it kind of late after the move. But however, news or no news, the market structure itself told the story, regardless if we got news or not, or if London lows swept any of that. Like, I'm understanding that just pure market structure and price action alone is all you need to be able to trade the markets, and understanding where you're going to go for the moment. So uh we drop down to our, what is this, 9:30 right here. So here we are, we're at that 15-minute fair value gap, and we're already 15 minutes short, and we're also already 1 hour short. So I was expecting price, because we're kind of low on this market structure shift down. We're kind of low. I wanted price to pull back up. It didn't have to go above these highs, but you see how we left these kind of like equal highs? This would be a prominent area to get in to go short, because we left these equal highs right here. So what I wanted was price to pull back up here. If price pulls back up here, I wanted to put me in for sales going down into this area right here. We didn't have to get down into this. We just needed enough room to go from here. Oh, wait. Why is it not putting this? Okay. Just to coming into this was enough, right? From here to here was 105 points. My move has to be at least 105 points. It has to make sense, right? So just the most recent lows or sell side liquidity was enough for me to say, hey, I would get in this trade if it pulls back here. So market opens, it pulls back into it immediately and closes back lower, keeping the market structure shift short, keeping the structure on the 1 minute as far as us going short towards the 15-minute and towards the hourly draw on liquidity. So playing this forward, it was a bit choppy. It was a bit choppy at the beginning, but ultimately we also had news at 8:30, which is why this is here. So if you know anything about news and data wicks, they are a high draw on liquidity area. So taking a short from here to this draw liquidity here was a high probability trade, going to at least the news, at least the data wick, right? But if we were going to flip the 15-minute and the 4 hour, not the 4 hour, if we were going to flip the 15-minute and the 1 hour, those highs up here would have needed to be ran through as soon as we went up, or we're going to come down and go up and run through them then. But those are the two possible trades right here, coming from here down into this 4 hour fair value gap, being with the 1 hour and the 15-minute. And then if we get into this 4 hour area, taking a trade from here back up to this buy side liquidity would be the second trade idea. And I ended up taking a loss today. I didn't take this trade down. On Top Step, I had my hotkey set, and when I pressed my hotkey, it didn't put me in the trade. And I just ultimately was like, okay, well, I missed this trade down. It sucked to watch the trade, play out and go down. But I was like, well, I got a second play. We could get a play off of the 4 hour going back long. So we're going to fast forward this a little bit. So my 1L that I took was here. All right. And I'll just walk through the process. So we swept all of the sell side liquidity here. And then we got this inverse fair value gap right here. And I'm not an inverse fair value gap trader, but I took a chance on it today, but I went very low risk on it in the event we did get the pumping and getting up out of here. So I did take this trade. So I ended up, I bought here, and I ended up putting my stop obviously below the low here, and I was trying to target these highs up here, right? So that was my trade idea for that one, and we ended up getting stopped. And me personally, this is why I don't trade IFVGs. But that was a loss there. And then I ended up saying, you know what, I'm going to just stick to what I like. And if we get a market structure shift long out of this, if we get a market structure shift and we came off of the 50% here, right? Remember I said earlier we was going to try to get down to the 50% of the 4 hour. This is the best possible area to be in. And we ended up getting a market structure shift out of it here. We entered on the pullback of the next candle, trying to get back at this breakout. So we entered here, and we ended up catching like 80 points. So I only went up to this high right here, and my stop was below down here, and hoping that this fair value gap would end up holding. And if you traded today, you saw it ended up holding. And by here, I was already at break even. So the risk was off the table, and yeah, we ended up going into this high right here, and that was my trade for the day. I ended up getting out here, and the chart is actually still going. So yeah, it ended up taking the full buy side, but I was good with taking money from here to here. So all in all, you just need to know what price is going and where it's coming from. If you know that your higher time frame, whichever one you're using, if you know that your higher time frame is bearish or bullish, make sure you're in the best possible area in that time frame structure to target the other side. And vice versa with the 4 hour. Like if you have a 4 hour and your 1 hour is different, well, if I'm at the 4 hour mark to push me the direction, then I'm gonna go with the 4 hour market structure. If I'm at the 1 hour mark, then at the 1 hour, if I'm at the best place for the 1 hour, then I'm gonna take that one. That's all it is. Regardless if you got news, regardless if you got London low, Asia high, Asia low, a lot of times all that is, and this is just me growing as a trader and starting to understand, saying London low and all of that, I understand now why those would get like it would end up being a liquidity sweep, and then price should reverse from here. Why? Because now I understand that, hey, I'm at my higher time frames bullish best place area. So I don't expect London low to get swept and price to continue going down, because I'm at the area where price is bound to reverse and go up. So price action and market structure over areas. London low, Asia low, previous day low, all of those are just targeted areas. Data wicks, those are just targets. But you want to be in the best place area to target it, instead of being like here and being like, oh yeah, I'm finna go here. Yeah, you'll go there, but you're not in the best place. It's not worth it. So that's the trade recap of the day. You had two plays. You could have took a play from here down, and then a play. So a play from the 1 hour and 15-minute structure down here, and then a play from the 4 hour structure back up. That's just trading.